If I show you this chart, can you tell which time frame I'm using? No. If you view a chart on a minute, hourly or daily time frame, you wouldn't be able to distinguish one from the another. That's because the price actions on the chart have factual characteristics. We can see similar patterns at various time frames. This is very important topics in trading, and today you will learn how to correctly trade markets fractals. So if you could like, subscribe to the channel and stick around for the full video. What's the fractals? At the very core of market, fractal is the basic building blocks of price movements up and down. Fractals indicates market turning points or swing points. Every support or resistance formed in your chart. First, smart with fractals, you can see why fractals are one of the best tools, especially when trading price actions. In any trading decisions, this is critical to find support and resistance areas, whatever time frames we are looking at. Fractals were introduced by Bill Williams in this book's Trading Coach. Fractals are content on the idea that there's repetition in the price behavior and they can provide an insight into repetition patterns. The indicator usually looks like the 5 bars model, which is aimed to identify possible reversal points and detect the directions of the price. In order to detect the fractals formations, you must look at the 5 successful price bars. The third or the middle bar represents the highest high or the lowest low. In the up fractals, the middle bar will have the higher heights than both of the bars at entry side of it. In down fractals, the middle bar will have a lower low than both of the bars at entry side of it. Keep in mind that fractals arrow appears only above or below the third candlesticks. If it is the highest or the lowest of the 5 bars, a bearish fractals patterns, which indicates a market reversal to the downside, forms when each of 3 successive candlesticks shows price recording a high highs, followed by the 2 candlesticks showing price actions with the lowest highs that the high of the presenting candlesticks. Bearish fractals patterns serves as resistance, and bullish fractals patterns, which indicates a market reversal to the upside, forms when each of these successive candlesticks show price moving to a lower low, followed by 2 candlesticks showing price actions with a higher lows than the low of the percent candlesticks. These fractals act as support level. Fractals provides more reliable signs on the higher time frames, but it will also display fewer signals. Obviously, depending on what time frame you are using, the absolute amount of time requires to form a fractal patterns varies. If you are using an hourly chart, fractal patterns can form in 5 hours. If you trade a daily chart, you will see fractal patterns that form over the course of 5 days. One of the advantages of fractal patterns is that it is relatively easy to spot on chart. Notice there how the middle bar within the up fractals has the highest highs of the entire 5 bar structures, and how each of the 2 bars preceding it and following in the lower high. This creates a level of resistance in the market, and expecting it for the price to continue lower until the next down fractals forms in the market. When you look at the middle bar within down fractals, you can see that it is the lowest low in the entire 5 bar structures, and that each of the 2 bars immediately before after it have the higher lows. This creates a level of support and make the expecting for the price to move higher until the next fractals forms in the price actions. The structure of the market fractals is fairly simple to understand. You can build many different trading rules and models around the concept of fractals, but very important, the fifth candles in the fractal patterns must close before they make trading decisions. This because the price can move during the time the fifth candles is forming. If price moves easier above the higher highs or below the lower lows while the patterns is still forming, the fractals indicator will disappear from your price chart. So you must wait to the pattern to complete it in order to make sure that the fractal is confirmed. How to read the trade market fractals in the fractals patterns reversal V or U shaped bottom or top. Such patterns of price actually may indicate a market reversal, entire previous uptrending market gradually turning over the downside, or a previous downtrending market turning to the upside. At a minimum, fractal patterns is useful for identifying at least a temporary level of price support with the bullish fractals or the price resistance with the bearish fractals. So you can use fractals to determine the possible directions of the price. One way in which you could do this is by looking for broken fractals. A fractal is considered broken when it has been confirmed and then the price breaks through entire the highs or the lows of the patterns. If the price breaks an up fractals, the directions of the market is considered up, and if the price breaks down fractals, then the market is considered down. But this is not enough. On their own, fractals will offer many false signals as the standalone price actions tools. Fractals are quite unreliable. The main problem with fractals is that there are so many of them, therefore to get the best out of them you must filter the signals with some other indicators or forms of analysis. You must view a fractal's patterns in relation to the other confluence factors such as support and resistance levels, supply and demand areas, private points, Fibonacci levels, or round numbers in the other, or to evaluate the strength of the fractals. For example, if the higher points of the bearish fractal is considering with the supply area that also identifies that price points as the potential resistance levels, then the fractals patterns is more reliable and more likely to be an accurate indicator of the market reversal. Trend continuation breakouts fractals can help ascertain the potential direction of the price moves. For example, if the down fractals has recently printed on the price chart and the overall trend is higher, then we can expect price to continue higher. Along the same lines, if the up fractals has recently been breached by the new price lines, this is moving higher, then the upside breakouts can indicate that the price momentum may continue higher. So if the market is in a strong uptrend, there will be more fractals than broken to the upside than the downside. That being said, the inability to break through the previous fractals can give you a hint that the market is getting ready to considerable or perhaps even change trends. The questions then is when or not the market is going to turn around and break down the opposite directions fractals, because at the point the previous trend very well could be rolling over the changing fractals plus moving average or EVWAP, another way to use fractals with a moving average or with and hold VWAP. I've talked about the power of this tool in this video. Adding a dynamic level of support and resistance allows you to stay in the right side of the trend. For example, if you get fractals that forms in order directions of the trend, you simply ignore it. At least until the moving average or the web tells you it's time to go in that directions as well. If you have a 50 period exponential moving average that is moving to the upside, then you are looking for the up fractals being broken, as you not only have the fractals indicators pointing in that directions, but you have the longer term trades supporting the move as well. Or if the down fractals appears and is located near the moving average, then you can thread the previous moves as the pullbacks with the price found support and uptrend near a moving average. Three confluences factors that signals that the price is more likely to continue higher. Fractals trades management proceed. Fractals can also be used during the trade management proceed. We know that and up fractals can serve as resistance during the risk management, and that down fractals can serve as support during a declining market. As such, you can use these importance levels for the placements of stop loss and take profit orders. When multiple factors appear around the same area, let's say resistance area, you can set your stop loss levels when entering a short positions above the highest fractals. Make sure you don't place it right above or below fractals with a bigger margin in case there's some sort of liquidity hunt. Taking profits could also involve the use of fractals. For example, if going too long on fractals, you could exit the positions once price hits a bearish fractals. I heard some traders close their positions when the opposite fractals appears, but this is the better money management approach because the fractal signals will lag by a couple of bars. At least two close bars are needed for the fractals to be completed, meaning that when it provides signals, the price may be at another level compared to the signals, so don't rely on this approach to take profits. Fractals are excellent with visualizing major highs and lows and act as a support and resistance levels. A better approach to take profits is to few points above or below the previous factors. Multiple time frames approach, it is best to plot fractals is multiple time frames. For example, trade short-term fractals in the directions of the being long-terms one, and focus on the long signals during larger uptrend and on short signals during large downtrends. In the daily trading setups, for example, you could base your trades on the support and resistance area offered by the fractals on 4-hour and daily chart. You can check the 30 minutes or the hourly time frames to look for entries, but you will use fractals previous periods on the higher time frames to spot support and resistance area. In this example, you look for reactions at these resistance levels given by the fractals, and 4-hour and daily time frames and trade on 30 minutes time frames. Trading in lower time frames lets you to read the price actions while waiting important stuff resistance level on higher time frames. If price breaks this major resistance here, it can be potential breakout setups. If rejects the resistance, it can be a decent reversal setups. This price actions approach might not be suited for beginners traders, but you also experienced traders. Fractals could be a great help, perfect to finding areas of the value on your chart. Look for the areas where multiple fractals formed and mark those areas. If multiple fractals formed around the central levels and the price is unable to go through the zone in the important one, fractals illuminations. Now, let's be clear, fractals do not predict the price, they often lagging signals. The arrows of the patterns are typically drawn over the high or the low point, which is middle of the fractals. Now, where the fractals completes. Therefore, the arrows can be visually devised, so be careful. Why? Since the pattern is actually completing two bars to the right of the arrows. The first available entry point after seeing an arrow is the opening price of the third bar to the right of the arrow. I wouldn't base my entries on the approach of the single factor. Fractals has a practical meaning only as the part of the comprehensive strategy and only for the period of the more than 1 hour. Another disadvantage of the trading fractals is the fact they occur quite frequently in the ordinary course of price actions movements. Therefore, the pattern is prone to giving many false signals. That's why few traders rely on fractals indicators for the trading signals. Instead, they are using in conjunctions with other technical indicators. Remember, the longer the time period of the chart, the more reliable the pattern. So, look for fractals on the hourly, 4 hour, and daily time frames. If you found value and learned something new, leave us a like to show your support and check new video. Until next time.